Good morning, everybody. It's Tuesday, October 22nd. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn unchanged at 409.5. November soybeans were up a quarter at 981.25, and December Chicago wheat was down 2.25 at 570. This morning, the USDA had an export sales announcement of 359,500 corn to Mexico for 24. Yesterday afternoon, we got crop progress. Corn came back 65% harvested. That's versus 47% a week ago, and well above the average of 52%. Soybeans, 81% harvested. That's against 67% last week, and then 67% for the average. So really rocking and rolling there in the bean side. Winter wheat planting, 73% planted currently. That's against 64% last week, and right about the average. 74% was last year's as well. We are through 15 of 23 settlements for harvest price discovery for crop insurance. Corn is currently at 416.75, and soybeans are at 1013. Ben, we're looking at harvest numbers that came back yesterday. I'm sure we're even well above that number here as we sit this morning. Maybe give us a few thoughts that's on your mind this morning, and then we'll throw it around the room.
Yep. I just, in my mind, I look at harvest and people are going, we're 65, 67% harvest or whatever it is. And I think that when you have these really big crops, the weight on the infrastructure really comes in the last quarter of harvest. With the really poor basis levels that we've seen, conventional wisdom says that people are going to go to their bins and fill those up, and then whatever the processors can take in the east, they're going to go to reduced hours here in a lot of places, and then who's going to take it and put it on the ground? So from an infrastructure standpoint, and a really big crop, now it's a big crop, whether the yield winds up being 180, 181, or 186 or 187, we have a big crop. I think it's that last third that really kind of hits the market a little bit and jolts it. And at the same time, you're watching spreads tighten up. We're doing business, but the business is, by and large, it's been routine. I would say the one purchase that we saw yesterday into South Korea, I believe, that's typically going to come out of Brazil. So that's a little bit of a flag to look at that and go, okay, wow, that's impressive. So I think we have to see more than conventional business. I still think that there's going to be kind of the long tail to this crop, and we're going to see how we handle it, especially with low river levels. It was encouraging this morning to get up and see some rain moving across Iowa a little bit, just a little bit in Illinois, but backing up and looking at the Doppler from a bigger picture, the atmosphere is active in a lot of places. So I think we need that for fall application and things of that nature. But right now the focus is, where is that last third? Where's that going to go? That last 25%, that last 20%. So that's just kind of where I'm at. What I think, we need more than just routine conventional business. We have some lofty numbers projected in both corn and soybeans for export. And it's easy to get a little bit excited about it, but I think we might be a little bit early on some price enthusiasm.
Yeah, Dustin, what are your thoughts?
Yeah, Mississippi's still quite low. The 2-week forecast, though, does have quite a bit of rain coming in. So for that week 2, maybe the market's thinking about that a little bit here. We have a fairly low flat price. And I think the market's telling us, and we're seeing this every day with sales, that demand is there and there's a lack of willing farmer sellers. So kind of to Justin's point yesterday, once this is kind of locked up, buyers and sellers are not matching up right now at today's price very easily. And the spreads are trying to tell us that. So it is somewhat of a supportive look at the market. I think one of the biggest holdbacks has been the currency. We've had a massive run back up in the dollar index and a drop in the Brazilian real. If that it all starts to reverse with what the market's telling us of how demand's coming in, that would be a supportive factor for it. Still have to, think about risk in general, but I think spreads are telling us kind of a friendly demand story. We can't forget that.
Yeah, Justin, anything to add there?
Yeah, no, I agree with both Ben and Dustin. I look at call it 410 December, this fall corn, and we have a record crop. To Ben's point, whether it's a 180 or 185, like it's still a record. So we have a huge known there, and we got 410 corn. You look at D's 25, where completely unknown. You've got South America unknown. You've got obviously what's going to happen here. You've got high costs. It just looks very cheap to me. A 25-cent premium to this crop, which we already know is a record, and we're in the middle of harvest. So I think when you look at spreads, and the kind of why we focus so much on them is like you've got a record amount of available supplies right now, or the next, last third of harvest, and so much unknown about the future. You've got Brazil, we're really competitive, especially if you look at like March forward for corn demand out of the U.S. I just think corn's got a pretty good story if you look at Q2 forward, maybe even Q1. So I'm not wildly bullish by any means, but I do think we're at really low value area prices, especially out forward for corn. So in the short run, I think it's more spreads basis. To Ben's point, infrastructure issues that we're going to run into here, Q4. But yeah, I think this demand's great and all these things, and I think out forward, it looks like Brazil, their export pace has really been shutting down. It's been really lagging. So, I think that in Ukraine, I think there's enough world stories out there that corn should be the shining star if you look at all the commodities. Beans have an issue. Personally, I think that's, kind of the flip side of all this, bullish talk is you've got some giant bean numbers written down to hit the government number for export. I'm not sure we're going to hit them. I mean, we're doing kind of normal business right now, which feels good because it was so low coming into it. But, Brazil, by all means, is going to have another record crop. I think you have to kind of play for that, whether it's, the same as last year or 30 million tons bigger. I think that's the kind of talk, that you're talking with soybeans. So I think beans and corn are two different animals here, personally.
Very good. Anything else, guys, to add on the grain side here this
Yeah,
morning?
we're talking about spreads, and I think that Jason brought up something good yesterday, and I think that Dustin mentioned something in the wire that I think is relevant. Kind of two things there that could be driving tighter spreads, which is really just weakness in the back end, is they've gotten rains in South America. Dustin mentioned that, and then Jason's point yesterday that there could be some people trying to front load a little bit of demand ahead of U.S. elections and some of the uncertainty that comes along with that. So, it could be a little bit of a double whammy there on why we're seeing some 24-25 spreads be so firm.
Yeah, and and the other thing I want to mention too, Dan, is all the in the money November bean puts. Typically the long option holder is the position holder, and so if they're not wanting to actually be short, there's 119,000 contracts of in the money put. Average price closer to that 1050, 1045 area right now. Very few in the money call options. So those go off the board on Friday. Anyone that's liquidating that position might trigger, the market maker to buy back in the market. So that's something to kind of consider.
Very good. Well, I appreciate the insights there, guys. Ryland, pretty quiet start in the cattle complex yesterday. What are your thoughts this morning?
Yeah, it looked like we just saw a little bit of profit taking. Just kind of seems like there was not much to chew on. Beef prices still moving higher. Open interest was down like 700 contracts, so just wasn't anything to really spur much of anything really. We do have a cattle on feed report coming out here on Friday, so I think the market's going to be a little bit cautious into that. Generally speaking, probably closer to the end of the week. So October on feed looking for about 100%, so just kind of right unchanged with last year. Placement 96.5 to around 97, and then marketing's 102. So we'll see what other analysts kind of put out here, see what the feel is, but generally speaking, it's still expecting pretty tight numbers on the placement side of the market. I think you're probably trying to justify where the market's at right now. So we'll see what they say. Overall, I think our impression is that things are still tight. We're not really going to start rebuilding or at least until we see maybe some better prices in the back end of the market. But we have seen those spreads kind of change over the past few months. So I think overall, it's just a lot of caution going into the January timeframe ahead of the inventory report. So something to be cognizant of. But otherwise, we're going to probably start trading those expectations this week. Overall, on the hog side of things, new highs for the move, still continuing that. I think the market's starting to see perhaps some supply concerns. After last week's hog slaughter was revived, about 11,000 head. I think overall just kind of made it seem like, wow, maybe we are tighter than we expected. Maybe we're going to be underkilling the report. So a lot of things seem to be coming to light now, especially with the market holding up as well as it has. Managed money wants to be long, so they're actively playing some pretty strong defense down here. But you had a higher cash market yesterday, higher cutout. So there just hasn't been much on the bearish side of the market to really cause any kind of real breakdown. So still good just to keep your head in the game, stay protected at all times kind of thing.
Perfect. Appreciate that, Ryland. Thank you. One thing to note, tomorrow we will have a special guest on from Iowa. The grower is going to be on to discuss how harvest is going, yield-wise, progress-wise. So be sure to tune in. Also, we appreciate everybody that tunes in on a daily basis. If you would, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. And once again, we appreciate everybody that takes the time every morning to tune in. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.